everyone, this is Rob Roy and welcome to the Elliott Wave Options U.S. Market Update. Since our last full update, gold has caught a bid, but for how long? Elliott Wave nailed the big drop in Bitcoin and the market is consolidating, suggesting a breakout. But which direction? Let's take a look at the charts. If you're new to the channel, don't forget to drop us a like and subscribe to be notified every time we upload a new update. At the time of this recording, it is 11 o'clock p.m. Eastern Time on Sunday evening, and currently the futures are up 10 points. Before we get to the charts, as a former member of the PGA of America, I just want to take a moment to congratulate Phil Mickelson on his historic win at this weekend's PGA Championship. All right, let's take a look at the chart. You can see that we have a bit of a triangle forming. So let's look at the 10-day moving average. You can see that we are consolidating right there. The 10-day moving average moving dead sideways, so we'll take that off. Remember that we also still have this one potential upward zigzag left that has not been satisfied on its extension. So it's the C wave extended level right there at 426. But just want to reiterate, it did its job. We were looking for a 100% extension when you have a 50% B wave correction, so it's done what it's supposed to do. Now we look to see if it could extend to its 161.8% level. If we take a look at the DMI, it would suggest, yeah, there's no strength to the move, but that makes sense because we have this consolidating triangle. So here we have a wave 5 potentially over with a symmetrical triangle. Can it get any more classic Elliott wave than that? Now, if we do break to the upside, that would put us right about that 426 level. Or are we looking to potentially start some sort of a downward move? We've been highlighting over the last few full recordings the storm clouds that are on the horizon. Wanted to add a few more in this recording. Take a look at this chart. I know it's not super clear, but it's from Double Line. This is Jeffrey Gunluck's company. He's a bond guy. We talked about that in the past, but just real quickly showing you some of the charts that he shared that are of his concern. You can see here, this represents personal income, the percentage of personal income that's made up by government assistance, whether it's the unemployment bonuses, etc. And you can see it's over 30% now. That kind of rings of socialism. That's kind of nerve-wracking. This is the Fed's balance sheet on a 3-month change, and you can see this vertical move. Okay, so the Federal Reserve is injecting liquidity. We know that. They're injecting tons of liquidity. We know that. The question is, when do they start to take that back? We're going to look at interest rates in a minute, but at some point, they will take that back. So here we have the budget deficit, and with all the money that the government has been spending, it's not surprising to see this in the tank either. Who's going to pay for that? Our kids? Grandkids? Are we? We're going to have a crash, another financial crisis in the meantime? Just more worrisome things to keep in your mind when you're making your longer-term trading decisions. In the intro, I mentioned that gold had caught a bid, so here we are. We got above, finally, this area here at 165. Then we had a little bit of resistance at 170. We've broken above that. Now we're at the next level at 175. So we've broken above a couple key resistance levels. Now it looks like gold wants to go ahead and fill this gap. But what happens after that? If we look at the primary Elliott wave pattern, you can see that we're still in a 5-wave to the downside pattern. So does gold come up here, fill that gap, and then turn and head back to the downside? It would look like, with the nature of that move, a little more vertical than I would like, that gold could be setting up for some sort of a corrective move in the not too distant future. Now, if we blow through 70% on that wave 4 correction, then we could take another look at it, and then we would at least be looking at possibly testing these most recent highs. But gold's starting to get into an area where you might want to be a little bit concerned. Talking about interest rates, they're still consolidating. But check this out, at a higher level. That's something that the market's not really too excited about. So here's where we had the consolidation before. This little move down here with the wave 4. Again, the 23.6% wave 4 correction. Elliott viewed that more as a bump in the road than an actual full correction. He preferred a 38.2% corrective move. But look, the consolidation now is up a level. So we're consolidating up here around 16. Does that mean interest rates are getting ready to make that move to the wave 5? When we look at the DMI now, you can see that the ADX is diving down. I start to pay attention to the ADX as far as stocks or charts getting ready to break out once it moves below 13. And that's kind of what's happening. Now, we don't have a really nice triangle pattern. It's more of a flat, couple flats going sideways. But still, when the ADX gets that low, we're setting up for a potential breakout move. And we have the exact same thing going on in the 30-year. There was our consolidation there. And now the new consolidation at the slightly higher level. Again, I don't know that it means a whole lot, but could we be setting up here in the 30-year for some sort of a potential zigzag? It's now qualified in the wave B, and you can see that we have extension levels all the way up to the potential wave 5. The market isn't going to like it if interest rates start marching to the upside again. Let's take a look at the dollar, because the dollar is really in a precarious spot. So we can take a look. We have another zigzag here, looking at this move lower with the B wave correction roughly at that 38.2% level. You'd be looking for a 61.8% extension in the C wave. We're there. So we're also at a point of support right through here. You could draw that down and say, hey, maybe we go down and retrace that entire move back to the wave 5. But if we break this 61.8% extension to the downside, then the dollar's likely moving down here and breaking this level here of the previous 5. And would it stop there? Or would we continue on down and have another extension down to 161.8? I'd prefer to see the dollar hold here and start to show a little bit of strength. If interest rates move up, perhaps the dollar can do that and gain a little strength and not see this move down here. I just don't think that's a good sign economically. I know that companies like it for their exchange rates and profits, etc., international companies, but I'm kind of an old school guy. I like a bit of a stronger dollar. Now, I also mentioned in the intro that Elliott wave nailed the drop in Bitcoin. This is the chart that is showed of Bitcoin in our last Trade Finder webinar, which was last Tuesday. You can see the date up there on the 18th. And we were looking at this, and here's the zigzag that was set up. You can check the recording. We record the trade finders, they're posted. Here was the zigzag pattern right here, and there was the C wave extension right to the 100% level. And my comments during Trade Finder was, if this didn't hold, 100% extension didn't hold, we're going down here to 161.8. Well, look what happened the very next day. Boom. Right to that level, and then we backed up. Yes, it was oversold from the 10-day moving average. You know the expression. But still, to reverse right at the 161.8% C-wave extension, also retracing the entire 5-wave. We had 100% 5-wave extension. That's supposed to go back to the previous 4. It did. So we had two primary Elliott wave patterns calling for this level on Bitcoin. So where are we now? Here's where we're sitting, and actually at the time of this recording, we're basically right there. This is an end-of-day chart, but the live chart is showing Bitcoin right about this same low here that we had on Friday. So we're trading right in this precarious area. So you don't want to see this 161.8% level violated if you're long Bitcoin, because then it starts to get really ugly. The next level down is 261.8. So those of you that are long Bitcoin, I know a lot of you are, you want to see this 161.8% level hold and perhaps a retracement back up towards that 10-day moving average, the lime green line, see where things go from here. If you've been watching these recordings and you haven't attended a Trade Finder yet, I invite you to do so. It's great. We talk about the market, we look at Bitcoin, we look for trade considerations, and we also have a Q&A where you can ask questions throughout your favorite stock symbols, etc. So please join us next Tuesday. You can look at the comments section, the notes section under this video, and you'll see a link where you can sign up. It's free. Come join us. By the way, on this video, post in the comments section, where do you think Bitcoin goes from here? Does the 161.8% level hold, or do we head lower from here? As far as my opinion, probably not going to like it. It's a little bit politically correct. I feel that when two major Elliott wave patterns complete like this, we need to just take a little pause, let the next Elliott wave pattern start to set up. So I would be a bit neutral on where we go from here on Bitcoin. Last but not least, we always take a look at the VIX, and this is a bit ominous as well. You can see this big descending triangle we have here with all those lower highs, and then right here, I know that we came down and you could actually draw the line for the support level here, but my view of drawing triangles is to draw the two lines where you have the most touches of the line. So that's why I have it drawn up at 20. This was a bit of an aberration here in April and May. We're back above it. Now the question, do we break out to the downside here, which would suggest moving higher in the market, or do we get another one of these spike ups in volatility, suggesting a downward move, or to something a bit more sinister occur? So I stay with my theme. I think right now caution is the theme. We've been taking off long positions for our alert subscribers, not adding a whole lot to the long side, adding strangles because the market's in a triangle. We don't know which way the market's going to go, so it's a perfect opportunity to put on strangle positions where you don't care whether the stock breaks to the upside or to the downside. It's the prudent thing to do, in my opinion, right now. Thanks for your time. Take care, everybody. Look forward to talking to you again next week. If you like these recordings, I'd like to invite you to join our new Trade Finder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.